All right, so we're here live. Let me just do a test the sound, make sure we're good on sound.
Yep,
You can hear it. It's good.
I got you. Yep.
All right. All right. So welcome to our last Saturday special show.
It hurts me, Juan. It hurts me that this is the last one, man. It's
I know.
been
I know.
these have been fun, man. It's been fun to
It,
do.
it has. But you're anybody who's wanting to continue learning, you go on the Lucrum Discord. A lot of great free education, extremely cheap, very reasonable. So today, we're just gonna go over level 2, or actually hotkeys, like what are hotkeys, and then we're gonna do mainly our focus on trading psychology. So let me pull up here a slide. So so the purpose of hotkeys, a lot of scalpers really use it's mostly for scalpers. Like if you're someone that's kind of like just trades and you wait for a setup and you place a limit on an order, really hotkeys aren't going to be something that's attractive to you. But if you're like a day trader scalper type of person, that you're like kind of like a Ross Cameron of trading, where you need to jump in and then jump out, that type of person uses hotkeys. I do have hotkeys set up for me. I don't use them that often. The only thing that I do use is, so I have like, if I press Control C, I get out 25% of my position. If I hit Control X, 50% of my position, and Control Z, I get out 100% of my position. And I do that like if the trade is not going my way and I want to get out quickly before I think traders are just going to start selling, I'll just jump out. Or like, let's say it popped to an area where I had a price set, then I'll take out maybe a half a position or a quarter of a position and just hold the rest, just so even if it doesn't work out further, I'm still green in my trade. um, Hotkeys are very easy to set. Every broker is a little bit different on setting it up. I have light speed, but if that's something that if you're going to be like a scalper, then you may want to use hotkeys. I don't know if you use hotkeys, Penny Slayer.
All the time.
For real?
I frequently use them. Frequently. And just it helps me not have to go and move the scale and type in the numbers like Control C, Control Z, Control X. That's definitely what I do also. So it's the same thing. But yeah, man, I think it's great. I think it keeps you in the loop of the trade, and you don't have to necessarily take your eyes off of it.
Excellent. Yeah. So, yeah, I mean, so hotkeys, they are convenient, like, yeah, if you want to sell, like right now, if you would have to go into your level 2, type in the price or whatever, or hit if it's going to be limit or market. So, yeah, I mean, just by pressing a couple buttons pretty much does the work for you. So before we get into trading psychology, I wanted to, kind of like put it together and kind of show like a trade in action. And I got like I got a quite a few here. This is just one folder, but I got a bunch of folders where I review trades. So I used to, like when I first started day trading, I really pretty much did an Excel sheet and I would trade hundreds. And by the end of the year, I had like thousands of trades that I've kind of like um, jotted down and journaled. Nowadays, you have like, what's that? TradeView is one of them, I think. You have like software that pretty much journals everything for you. When I first started, it wasn't as popular. So I used to pretty much record my trades and also like jot down everything. I used to comment on my trades. This was just for me. And I'm going to just show one here where like I identified an ABCD pattern in the trade. I think this one was ABCD pattern here. Okay, so this trade here, I was watching it, like I missed this spike here, right? So this is, you get in, and then I saw that it sold off, kind of bounced off of here. So here I was looking, I was like, okay, this is starting to look like an ABCD pattern because, and this is live. I mean, like this is like recorded. Like I mean, I don't know at what point I got in. I got in at 395 here. You can see here 1,500 shares at 395. So, I saw that it bounced here, and then it started making a higher low. So I started thinking to myself, okay, I'm watching this real time. I'm saying, if this is an ABCD pattern, this is A here. I would say this is B. This area here where it figured like the higher low, this is C. So my profit target, I'm going to take partial profit here when it starts to break the original high. There's a small wick here. That's why I have the line. So I'm going to take partial profit here when it breaks the high, and that would be the D. And then I'm going to ride the rest to see how much more I can make profit. So you can see here, this is the level 2. I'm looking at the price action. I'm making sure that there's volume. I'm making sure that it's moving my way. The good thing is I'm in at 395. The good thing is I know where my stop loss is. The stop loss is right here, the low of this. So the stop loss is about 30 cents away, which is pretty reasonable to potentially make about 70 cents or 80 cents. So it's your stop loss is, my stop loss is double of what my profit target is. So we're watching here. It's kind of going my way. I'll fast forward a little bit. And yeah, I was just looking around at other stocks. So it's still good. So look, I'm still holding. I'm still bullish on it because it's on an uptrend. And I think here, like, look, while I'm trading, I'm saying I knew I wanted to record this. So I'm typing A, and I'm actually still, I'm actually in the trade. So here, look, I put A, B, C, D. And look, it broke. You can see it broke here. This is the D. So now for me, when I play this, I'm going to take profit here, but then I'm going to hold the rest to see how much more it's going to go. Because a lot of times the ABCD pattern, there's not like major continuation, but you still get a little bit more continuation. And I want to see this area here become support. Oh, okay. So yeah, I did this trade. Then I just showed you how I would journal it. And this trade I made, this one that we just saw, I think this one is this one. I made 213. Yeah, here we go. Yeah, 213. Let me go back to that. Yeah. So I made $213 on this trade, which is a small amount, but it's, it was I was only in position 1,500 shares, and I took some profit, and you see here 213. This trade took less than an hour. It's about 40 minutes. So, like it's a positive green trade. I had a plan. I identified a pattern, and this is what I saw. So being able to do that real time, it's different than kind of like reviewing past trades, right? Like, so that's why I wanted to record it and show it. What do you think, Penny Slayer? I mean, was it like pretty clear? It looked like ABCD pattern?
Yeah, absolutely. And even more so, what I liked whenever you were going into that trade is you really wanted to see it build support on that old resistance line. And man, that's how I trade too, man. Look, I trade confirmation just like that. And so yeah, man, it's a great trade.
So this is another trade. And this type of trade here, this is the type of trade where to me, I recorded this one. And what I wanted to show on this one was familiarity. So like a trade where, you're familiar with a stock, it's a mover anytime it gets any type of hype. So this was, I think this is Kodak, right? Kodak, right?
Wow, you traded Kodak, huh?
Well, so yeah, but
the good old Trump stock right there for you, Juan.
Yeah, the float is low. So this stock, the float is low, and they got some sort of news. So I jumped in this one really early because I know that anytime this gets news, that this thing moves. So this is like where experience comes in, right? Like it wasn't like when I jumped in. Let me see. I jumped in here. I bought in at $12.25, $12, $12.10, and it dropped even more, $11.86, $11.75, and I kept adding to my position. Now the reason I did that is because this is something you really can't teach, right? I mean, this is just like, I know this stock, I've seen it, I knew it had some sort of headline, and I know that anytime this stock gets a headline, it's gonna spike up, right? So this is like, I didn't see a pattern, I didn't see anything that was familiar. I was just saying, I know the stock, I know how it moves, I'm so familiar with the stock, I'm jumping in. And even though I was down, you see here, I got 300 shares at $12.25, and it dropped 50 cents, I still added to my position because I was that confident that I've seen it so many times. So let's kind of fast forward. Okay, so I'm commenting on the past. So you see here in the past, this stock went up from 535 all the way to 65. You see here it went from 5 to 10. So it has a history of spiking anytime there's a catalyst. And it had a catalyst. I don't remember what it was. This was a while ago. So jumped in. And you see here now, look, I sold some at 14, or I tried to sell at 14.25. So I sold some at 13.69, 13.30, all higher than when I got in. And you see here my profit so far, 489. You see my profit now is 564. And I think that was my final profit. Yeah.
It's a good trade. It's a good
Yeah.
trade.
Yeah. So this was, like I said, like, sometimes, you may not see a pattern. You just know a stock so well. And I was like, the news that Kodak got that day, it's not obviously, I mean, like, I wouldn't hold this stock longer than an hour. I mean, it's not going in no portfolio, but for sure, like, I understood this stock. I know how to day trade it. And, I made a quick 564 in a little over an hour's worth of work.
Yeah, man. And it's amazing. One is sometimes day trading will make you an investor. Have you realized that before? Like whenever you like make a position, and sometimes that position just skyrockets, right? You just get lucky and you catch a good position. Sometimes it turns me into an investor. You know what I mean? Like, I'll take my initial investment out and keep the shares for free, and then the company can do whatever it wants to do after that.
For sure. So this is a stock play based solely off of catalyst. So like BKY. So I have here scans. You pay I think like 150 a month, and they kind of give you like fast news, like real live news.
Wait, what program is this?
Scans.
Okay.
Like with a Z at the end. Like their news is like pretty much instant news.
Okay.
So I saw this. And as soon as I saw this small cap stock at 802 come up with this title, this headline here, U.S. government deploys, I knew that this headline was going to bring in traders, right? So all I saw was this headline. I clicked it really quickly and read it here. And I saw that, the government was going to give these guys, BKY, some sort of contract. And, the contract, honestly, it could have been a $5 contract. But day traders aren't going to read the article, right? Yep. They're just gonna look at the headline. They're gonna look at this small cap stock and government contract. That's all they're gonna read, and it's gonna bring in volume. So I saw that and I jumped in. You can see here I bought 2,000 shares, 2,000 shares, 2,000 shares, 2,000 shares. I think I bought a total. Yeah, I bought a total of 10,000 shares. You see, 10,000 shares, and then I sold it as it spiked up. And you see here, the profit was $1,000, $1,074. So this was all I bought this stock at 821 and sold it 7 minutes later. Here, look. So this is BOT bought 10,000 shares. I sold 2,000 at 828, 2,000 at 828, 2,000 at 828, 2,000, and the last 1,000 at 830.
Dude, so I love this program that you're using, by the way, and I'm gonna have to look into this. How much are you paying a month on this?
I think 125 or 150.
That's cheap.
Yeah,
I mean, but you can definitely cheaper than Benzinga Pro.
Oh, I used to have Benzinga too. I was actually supposed to work for Benzinga a long time ago. But
really?
That's another long story. But Benzinga is pretty good. But this is good too. I mean, this gives you quick news. You can also pull up the charts. You can pull up level 2. They have different things.
This is great. This looks good.
Yeah. So this is a 9-minute trade. 9-minute trade, and this was the realized profit, 1,074 in 9 minutes. Just because of the news headline. That's the only reason I traded it. I was like, I saw the news headline. I knew it was going to bring in hype. I said, I'm going to jump in with 10,000 shares here at 821 and sold them about 7 minutes later and made a quick $1,000 in 9 minutes.
That's great. That's good stuff, man.
Yeah.
Yeah. I'm a catalyst trader too. I look for the same thing. Matter of fact, Juan, I'll tell you a really quick story. I recently traded a company, LLL. If you ask me what they do, I have zero idea. But I was watching the catalyst come through, right? And the catalyst came through that there was a 600000. They just spelled it out, right? And I go, oh man, that's a $60 billion contract. Let me go make a position real quick. This is about to go. And so I went in, made my position. And then later on, when I read the catalyst and I had made a few bucks, I think I made like 180% on the play. I looked at the catalyst again and it wasn't 60 billion, it was 60 million. And I go, what a mistake in my favor. But that's what I get. I need to slow it down sometimes, man. I just need to slow it down and
But
read the catalyst.
but that's a good segue though, like for our topic, which is psychology.
Yeah.
Psychology played a big role on it. The same way I treated the BKYI, I just saw the title, the headline, and then I read it, and I knew it wasn't a major contract. But at the same time, I know that people really aren't going to like read the whole contract, so I felt like it was going to get a quick spike. And this is like another psychology play. I saw that this stock was on fire. It spiked up. I missed it. So I said, let me get in for the VWAP bounce.
Boom.
And the VWAP bounce worked because it had a catalyst.
And it's got volume.
It's got volume. So it has all those things. So I feel like, okay, I missed this spike. And a lot of people like me missed the spike and they want to get in, right? They want to jump in. So I jumped in during VWAP and I think we got a good bounce after that, if I'm not mistaken. You see here, I'm typing VWAP.
Yeah.
I'm putting the notes for myself, like to show.
That's great.
And that's
the end of your video quit.
Yeah, I guess that was it. So anyway, so I guess I just showed though that I jumped in during the VWAP and I jumped in here because of the VWAP bounce.
Yeah, I mean, I agree, but one, that just leads me to believe that there is an arsenal, right, of trading opportunities that you have ready to trade at any given time, right? You can trade in so many different ways, and it's good to see this as a growth pattern of you adding to your arsenal of trading expertise. I love it, man. It's good stuff.
Yeah. So here's another one talking about different trading strategies. So this one, I saw that it hit resistance here, kind of broke it quickly, then it just sold off, right? And then there was a lot of fear. So I missed all of this. And I said, you know what, let me catch the bounce. So I had like areas where I thought, I had support. And then you can see how it, it found support down here and it just bounced and it reversed.
Yeah. Matter of fact, you can see how it broke that MA, right? I love that. Yeah, that's good.
So yeah, so there's some small opportunity for like a nice little bounce. All right. So I mean, so all these things work because of the psychology of trading. Like you're going up against institutional traders, you're going up against retail traders, and you have to really have a good understanding of psychology to be a good day trader. I mean, it's such a big part of it. I think it's the most important part of day trading, to be honest with you. I don't think nothing matters more. You can have all the skills, you can learn every strategy, but if your psychology game is off, then your day trading game is going to be off. So we look at here, we look at kind of like this picture here. This is the greed, everybody holding on, everybody jumping in. And then there's, once it's not, once these guys bought at the top and it didn't keep going, then there's their fear. And then that's when everybody sells. And like for large cap stocks and stocks that are worth investing in, Warren Buffett coined kind of like investing when there's blood on the streets, meaning as soon as like a headline comes out that, hey, these guys didn't meet their EPS earnings or whatever their forecasted earnings, or they missed on revenue, people start to sell off. And some of the big dogs traders that know, okay, you can have a slow quarter. This stock is too cheap. This is when I'm going to jump in because everybody's selling way too cheap. This stock is at a discount. So trading psychology, success in day trading, I think it's 50% psychology, 50% technical analysis, and financial management. Some people say even higher for psychology. If you had to put an estimate on it, what do you think part of psychology is trading versus trading?
80-20, in my opinion, right?
I've heard 80-20 before.
Analysis will only get you so far, but your mental capacity, it has to be on point. It has to be at its top peak of game, in my opinion.
Yeah. So 80-20. I've heard plenty of people say 80-20. Um, certain things that affect your day trade: becoming overconfident, failure to take blames for mistake, revenge trading, boredom trading. I think all of us have lost money because of some of these, either one or two or three, or maybe all of them.
I'm guilty of revenge trading, especially at like the beginning of my trading career, right?
Yeah.
I took a loss and I go, oh, I lost $150 here. Let me just jump in this real quick and try to make it back. And that's just the wrong way to do it, because what that does is it takes you off your game and it shifts your focus to winning money instead
Uh,
of shifting focus to your trading style, your trading rules. So, yeah, absolutely, man.
yeah.
Revenge trading was a bad one for me.
I've noted all of these because these were my problems. Like overconfidence for me is like, I've said this so many times though. Like, but like that day that I made $1,000, right? There's days that I made way more than that. But like when I trade the next day, I go in with the mentality that I have $1,000 credit, because I'm up $1,000. So now I'm taking riskier trades that I probably wouldn't take before. So to me, that's that overconfidence.
Yeah.
And the way I overcame that was like, if I had like a big green day, like I made 5,000 or 3,000 in one day, I usually won't trade the next day. I'm just like, man, I can't trade the next day because that number, that 5,000 credit, is going to stay in my head, and I'm going to trade irresponsibly the next day.
My man, taking a break, right?
Yes,
Take
sir.
take take a break after your big win day so you can get your mind right? Because happiness isn't it's a habit. It's not an event that falls upon us. You know what I mean?
Yeah,
So you got to just take your break, get your gains, reset your mind, get back the next day after. I love that, man. It's good stuff.
absolutely. Trading psychology: stocks move because of traders, right? I mean, that's why it's you have to know trader psychology. These stocks move up and down because of traders trading it, not because they just move by itself. Traders buy stocks, goes up, and if they sell, it goes down. So trying to understand what everyone else is doing, you'll gain an advantage, right? That's why these support points help, right? They're not like magical lines that when a stock hits it, it's automatically going to bounce. No, it's like a self-fulfilled prophecy, right? These support lines work because everybody's looking at these support lines. That's why, like, when I've seen, like, these some scam artists that come out and say, I have this secret EMA formula, this 374 EMA, that if you mix it with this, like, and I'm like, bro, if you're the only one that knows it, then it's not going to work, obviously, right? That
That's amazing.
yeah, he's like, oh man, I don't know what happened. I bought this program and it said to trade on the bounce of the 374 EMA, and it didn't work. It didn't work because you're the only one that's trading on that 374 EMA.
If I
So
can if I can touch here a little bit,
yeah, absolutely.
so stop losses, I think, is sort of what we're getting at here, and setting stop losses and knowing that there's two sides of the trade, right? You've got your bulls and you got your bears. Okay, sometimes you have your apes now, they kind of got their own little seat at the table, but you have your bulls and you have your bears, right? And if you think about the bull side of the trade, you're thinking one focus. But if you can also try to figure out what the bears are trying to do into your trade,
Yeah.
that's going to open up your trade mindset so much more. So, for instance, Juan, I'll touch on this just real quick. My
No, go ahead.
stop losses, I never set my stop losses, and this is mental stop loss. I never go into the program or program a stop
Yeah.
loss. But, I'll mental stop loss, never on fives, never on zeros, and never on even numbers. Just because I think that the bear side of this trade is they're trying to get at those numbers. They're trying to short zeros and fives and even numbers. So I set my stop losses at odd numbers, and I may even skip a few. So if it ends at 1, I'll skip it down to a 7, whatever that ending number is. And I kind of gauge my trade that way. I think it's fun. I think it's
Yeah.
understanding how the bears move in the market. I think that it's sort of like a chess piece game that you play. And it's fun to me, man. I love it.
Yeah, absolutely. I mean, like, even if you're not a person that's big on shorting, you should know how to short. You should know when people like to short, because that may be a good indicator of, let me get out before this stock reverses and a bunch of shorters come in. So yeah, no, that's great for sure.
Bingo.
And yeah, so volume leads to hype, momentum, FOMO. So like to avoid the psychology aspect of it, of just like losing money, you have to come to the stock, to the day trade, with a plan. So you want to trade with the trend. Just look at the trend. You want to have a plan, enter when there's clear technical levels. You want to identify your stop losses based on support, and taking profits based off resistance and momentum change. So like I showed you before, like I knew that I was taking some profit at the D point of the ABCD pattern, because historically it breaks that D pattern, it breaks the D area, which is the high of the A. And then I know, like, just from my experience, that about 70 or 80% of the time that there's some a little bit more momentum afterwards, but usually it just reverses and crashes not too long after it breaks the D. That's just what I've seen before. Unless like you see it breaks that A area, it's the new D, and now it becomes support, then you may have some confidence that, let me hold it a little bit longer. Never set a daily profit target. This is my rule for me. There's some people that say, I want to make $100 a day, $200 a day. There's some people I've seen. I think it's True Trader guys. I don't remember what their program is, but they say, we guarantee you're gonna make 1% a day. I mean, like, I would stay away from anybody who says stuff like that, because if you make profit 1% a day, I mean, you're gonna have the GDP of the United States times 10 in a few years. I mean, so it's impossible. Like, mathematically, it's impossible to make a 1% a day every day. I mean, it's not possible. However, do set a daily stop loss if that's so. For me, I mean, depending on your size of your trade, like when I first started early, I said, okay, if I lose $100 for the day or $200 for the day, that's it, I'm quitting. So
Yeah,
trade.
I never let a bad day cost me more than what I make on an average win day. Does that
Yeah,
make sense?
that does,
Like,
that
I'll
does.
never let a trade get by what I normally make on a good day. That's
Hmm.
that's sort of what I take it as, because then you can make that loss up. You never get $2,000 or $3,000 down. You're always in the upside. You're always staircasing up.
Yeah,
So
and that's a big part of the strategy of day trading, right? You have to control your losses, right? Because let's say you have 30 green days in a row, where each green that you're like, look, I'm 30 green days in a row, and each day you made $100, right? So you're up 3,000. And then you have one red day where you lose 5,000. Then who cares about your 30 green days? So you have to control your losses, your stop losses, and how much you lose for the day. And you have to get in trades where the risk is higher, the risk is lower than the reward. So you're shooting to make 30 cents, but you're only risking 10 cents, for example. you know 30 cents, like, let's say if you get in with 1,000 shares, your goal is to make 300. You looked at the pattern, and that's what you think you have potential of making. But if it doesn't work out, I'm going to get out once it drops 10 cents. So you're risking $100 to make $300. Now, if statistically, I mean, you can be right about 50% of the time, 40% of the time, and still be profitable, because of what your profit potential is versus your loss potential is. Trade with an amount you're comfortable with. Slowly build as you become more consistent. This is so important to me. Like when we talk about day trading, right? But if you have, like, let's say $1 million, I'm gonna tell you, man, take 90% of it and put it in an ETF, put it in some big name stocks, some of the Apple, some of those stocks that are gonna be good. And if you want, then maybe take 5%, 10%, and just day trade that, right? Like, don't I mean, like, even though I'm talking about day trading, I'm not gonna like put the house on a lean on a to try to day trade the house. Like, like, it's just like it's a small percentage that you're trying to grow. I mean, like, don't go crazy day trading, like, and don't use like 7 times leverage and this and that. I mean, just bro, just like, keep it small. I mean, the odds are against you when you day trade. Just understand that. So just take a small portion of your wealth, your savings that you're okay losing, and trade that. Never revenge trade, and understand where the majority of traders are. So this is also important, right? If you're just trading a stock that you like and nobody else is trading it, then it's not going to move. Like, you have to go where the mob is, right? Tracking your trades, you want to prepare for longevity. So, like, take your profits and save them, like, just maybe invest your profits into like long-term stocks or something, and just like restart again. Start, to me, it's just, you can't day trade like big amounts and amounts that you're scared of losing. You want to build on a strategy. Uh, with more consistency, you can increase the position. So what this means, like if you have a strategy, right, and you want to practice it, start off small. So start off like maybe, I don't know, 50 shares, right? Just a small portion. It's a new strategy. And if your strategy is working, right, you've tested it hundreds of times. Now start building on it, right? Now say, okay, you know what? It's working. Let me try it again. Now try with 100 shares. Because if it worked with 50 shares, it's going to work with 100 shares. Now try with 500 shares. You're like, okay, I have a lot of confidence. I know this strategy. I know that if this, and this checks off, there's a 70 to 80% chance it's going to be some more upside. So now, you've tested it several times. You tested it with small positions. You know the conditions of your strategy. You know when it works, when it usually doesn't work. Now that you have all that information, you started off with 50 shares. But if you're confident and it's a solidified strategy, now you can start going in with normal size position, whatever that is, 1,000, couple thousand shares. So if it works, so just remember that if it works with small amount of shares, it's going to work with a large amount of shares.
Build your confidence, ladies and gentlemen.
Mm-hmm.
Build your confidence. Get back to the basics. If you have a bad trade that takes away some of your gains, then take a break, get your mind right, build on your basics, take smaller trades, get back to building your confidence because it'll get there over time for sure.
Absolutely. Journal all trades with notes on why you entered and exited. And I showed that like that's why I showed the video at first, right? I did that, the trade, and then immediately I put it in the Excel sheet. I put in what time it was. I put in what time I jumped in. What was my goal entry? What was my goal exit? When did I actually get out versus like what I thought my exit was going to be? What was the float? What was the market cap of that stock? What were the conditions? And I put notes like what was I looking at? Why did I jump in? What strategy did I see? So you start doing that, right? And you start building an arsenal, and you might see a pattern, right? Like for me, like when I saw a certain market cap of a stock, it didn't really continue the way I wanted to when I had a strategy, right? So maybe I had a strategy, and that strategy only works if the market cap is between this and this and that, or it only works, I noticed that between 9 a.m. and 11 a.m., my strategies work better than after 11 a.m. So, I have let's say a 10% advantage between 9 to 11 a.m. So, you start seeing like little things here and there if you build your strategy, if you start journaling your stocks and stuff. Is that something you guys do? You guys journal a lot of stuff, or?
Yeah, no, I always keep a journal. I think that it's important to get back to your winning trades and your bad trades, but it also helps you keep things on the radar, right? Because as much as these volume spikes come and go, they sometimes return, right? It's
Yeah.
almost like a repeating pattern that comes. And so you always like to keep those sort of on the radar, if you will, right?
Yeah, absolutely. Identify your failure and success patterns using your journal. Again, that's important. Like I found, like out of all the trades, I started narrowing down a couple patterns, and I noticed that like pre-market breakouts, ABCD patterns, were my biggest comfort level. Like for some reason, anytime I seen those patterns, I was able to identify those patterns. Then a big reversal pattern, or a momentum stock or something like that. I had less success momentum trading, trying to trade like warrior trading people and stuff like that. That wasn't successful for me. It wasn't easy. Like maybe I just mentally I couldn't handle it. It's hard like to see like a quick breakout, jump in with 10,000 shares, jump out with 10. I mean, like it's too intense. That's it wasn't my style.
Juan, the one that survives the stock market is the guy who's most adaptable to change. And,
Yeah.
that was pretty much a quote by Charles Darwin, right? And so as long as you're able to adapt to that change, you're good to go.
Yeah, that's extremely important. I mean, like I remember like if you look at like momentum, right? You'll see like during certain stages, like when everybody was talking about bitcoins, like all the crypto stocks were like moving. Then there was the wheat stocks, all the wheat stocks were moving. Pre-market was hot, like everything pre-market was moving. Then after hours were hot, everything after hours were hot. Then momentum trading was hot for a while. So everything goes in stages, and you have to be able to identify that and then adjust with whatever's trading. And if you want to survive, like you said, never overtrade or have a great trade, then become super aggressive because your profit. I put this because of me. This is like 100% me. Like I'll overtrade if, if I didn't make money that day or I just got bored. This is like past, like obviously past bad habits. Or I'll have a great trade, then become super aggressive. This is I emphasize it so much because it's my biggest thing. Maybe it doesn't affect anyone else, but I don't know why I would do this every single time. Whatever my green day was, if I, like I said, I told you this earlier, that if I on Monday I said, yo, I had a great day, I made $2,000. Tuesday, I'm going in with the mentality that I'm $2,000 up plus, so I can do whatever I want. I have wiggle room. And I say, okay, I'll jump in a trade where usually I may not have jumped in the past. It's a very high risk trade, but I'm jumping in because you know what? I'm up 2,000, and then I lose 1,000 on that trade, and I'm like, oh, okay, yeah, I still got 1,000 left. I'm still going to be green because of yesterday, and I jump in another bad trade. So like I was able to identify that. So I put a rule on myself. And talking about Ross Cameron again, I remember one of the things he used to do, if he did like a bad trade and he broke a rule, he would run a mile or something like that, or it was something like that. So like there was like one day he had to run like 5 miles or something because he broke his rule like 5 times. But
that's funny.
But that works for him. Like I'm not running 5 miles, but I'm just gonna say like I'm not gonna trade the next day. That was my punishment. I was like, okay, you were green today, preserve your gains. Don't trade the next day because you're gonna go in with the mentality that you have a credit of whatever you made green on, and just wait one more day so you can reset and go in fresh like you're at zero again. You know what I mean? Do you have anything like that you identified and you had to kind of like adjust or like punish yourself or do something like so that you can kind of like stay on the straight path with that?
Yeah, my punishment is grounding myself from trading, right? I mean, I believe in breaks. I believe in taking a pause, still watching the market, right? Because listen, if you spend time away from it, you may lose your footing. So usually what I like to do when I take breaks, I just watch, right? It's almost like watching a TV show. I let it read the book, and I use the MAs sort of as my chapters. And, if I can get close to breaking into the next chapter, then I may think about entering trades again. So it's just all about, letting it move a little bit before I recognize it's time to get back into a play.
Have you ever got kind of like that FOMO where, you're punishing, you're sitting out and you're like, oh my God, I could have jumped in. I could have made money here. And
Absolutely. But you know what, Juan? I never touch it, man. I never touch it. I'm a big believer in spikes, right? I mean, I know catalysts are just one of those things that come for a stock, but if you try to trade on that first spike up, what you're really losing sight of is all the people behind that spike that have been bag holding for months.
Yeah.
With apostrophe S.
Yes.
Like months. And I think that you have to be cognizant that those people are ready to get out of the trade. And so, they're going to be selling. It's up to us as momentum traders, if you are a momentum trader, to recognize the slight back up, right? If there's volume in the stock to push it back up to the high side. And so that's really where the skill becomes in play here. But yeah, man, of course, I've been victim to FOMO before. Absolutely. Like DWAC. I don't know.
The WS. Yeah, I remember. That's the Trump stock. Yeah.
Listen, I bought on the spike, which is something I never do, but I'm like, this is going to be an easy money play, right? And luckily, you got up pretty high on DWAC, but it's catalysts like that can cause you to have some very big FOMO for sure.
Yeah, absolutely. So common mistakes: ignoring technical analysis, ignoring chart patterns. Again, you should go in with a plan, trading out of boredom or revenge, averaging down losing trades. This is a big one right here. I was showing the Kodak one that I was averaging down on a losing trade, but I had a plan. I mean, I was confident that it was going to go up because it has so many times in the past. But that's not a good strategy, right? Like if you have a plan and you say, you know what, if it hits my stop loss, if it hits this support and it doesn't hold, I'm going to get out. So, you should get out then, and stick to your plan, because it's in the past that area has held and it's not holding now. So more than likely it's not going to hold and it's going to keep falling. Right. So, some people, it breaks and they're like, you know what, I'm going to buy 1,000 more shares. And then it drops more. I'm going to buy just one more 1,000 shares. I'm averaging down. So once in a while, it's okay to average down, but if don't make it like a common strategy where you have a support, it doesn't hold, and you start averaging down, meaning you start adding to your positioning to try to get back and hoping that it turns around. And the worst thing that can happen is, like, I'm telling you this, and then it breaks and then it goes back up and it skyrockets. Because you see that and you're like, oh, next time I'm going to catch that. Well, that happens maybe less than 20%, 10% of the time. So you want to do things that are in your favor, right? You have to build the odds in your favor. So, like, the majority of the time, if support doesn't hold, less than likely it's just going to find kind of like a bottom and then break that area and then skyrocket. It does happen sometimes, but that's not what's going to happen the majority of the time.
Juan, do you set alerts for stocks? Do you set alerts like when it gets to a specific price? Do you have your application ping you when
Yeah.
it's there?
Yeah, I have certain alerts, like for certain patterns, like where I do like the pre-market breakout, right? So let's say it's forming a channel like this pre-market, right? And then I'll have like 4 or 5 stocks where I'm looking at that channel form. It fits some of my criteria. And let's say this is $4. I'm saying when the market opens at 385, I want to get an alert, right?
Yep.
So I'll get an alert at 385. Then I'll hit that. I'll look at the chart. I'm saying if it breaks and it has volume and there's a bullish candle and all these conditions, I think it's a pre-market breakout. I'm going to jump in. So that's, I have that. That's one of my alerts that I have.
What's crazy is, one, like, I probably set 20 or 30 alerts a day for myself.
Oh, that's a
And
lot.
then over a period of time, sometimes those alerts ping me. They're like, hey, go look at it. You know what I mean? I go, oh yeah, I've seen that chart before. Let's go back to it. So yeah, man, I love alerts for sure.
Heck yeah. Not following stop losses or going against a trend. So yeah, you should have a stop loss, right? Like a stop loss can be a support area if it doesn't hold. What are some stop loss areas that you set, Penny Slayer?
So again, my stop losses, no zeros, no fives, always odd numbers. But my risk management is usually 1% of my portfolio, man. Like,
Okay.
I don't get too crazy with it. The most I'll ever spend on any one trade is between $1,000 and $5,000. And that's really sort of my niche. That's where I tend to make my most money. But like I said, I never let my risk overtake my potential average win days, right? And so my risk is always hovering around that $1,000 to $5,000 mark because I know I can get it back.
Absolutely. Good. I love it. Understanding losses. Every trade should have many factors in your favor. So when you jump in a trade, you have to put a lot of factors in your favor, meaning like some people say, okay, I'm only going to trade stocks that have a catalyst, stocks that make sense from a technical analysis aspect. I've identified support. I've identified resistance. You want to have like a confluence of different things that are working your way before you jump in that stock. For me, and this is just my mindset, I don't want to just jump into stock because there's one indicator, it's breaking, previous resistance. No, I want to have a bunch of other indicators. I want to see a bunch of other things in my favor saying, not only is it breaking this area of resistance, but there's this crossover on the MACD, or there's this support, or there's it's breaking also this area on the Fibonacci retracement. There's I want to see a whole bunch of other factors in my favor before I jump in that trade. And then even with all that above, you're still not going to be 100% accurate, right? Just understand that no matter what, you can get into I'd rather get into a trade where it was a great trade and I lost, instead of making a little bit of profit on a terrible trade, because making a little bit of profit on a terrible trade is just going to build bad habits. So it's fine if you follow the plan and you weren't profitable, but you got out quickly and minimized your loss. That's a great trade. I mean, you did well. You're building good habits. You're building great habits, and you want to keep doing that.
Yeah, I mean, trading is not 100%. I mean, listen, if any rule that you ever follow is 100% winner, then everyone would be doing it, right?
Yeah.
And so even the way that I trade, I'm usually at the best of my game. about 80%. And I've been trading for 20 years, Juan. You know what I mean?
Yeah.
So I think that it really goes hand in hand that nothing is 100% accurate. And you just have to build the best platform or best way to trade you possibly can.
Yeah, absolutely. And I like to show this because if you go into your trade and you have a good plan, right? And you know, for example, your risk to reward, meaning let's say here you get into plans where I tell myself, okay, if it goes up 10 cents, I'm gonna take profit. But if it drops 10 cents, I'm gonna get out. So if you do that one for one, that means you have to be right 50% of the time to break even, right? So like if you take 10 trades, you made $100 on the first 5 trades, that's 500. And then on the last 5 trades, you lost the one, which is 500, then you broke even. So you got to be right 60% of the time if you're getting in 1-to-1. But now if you get into better trades, like higher quality trades where, you know what, I know this stock has the potential of making 20 cents and I'm only going to risk 10 cents. Now you only have to be right 40% of the time out of 10 trades. Let's say you're going to be profitable. And then look, I mean, like the higher you, I mean, it's hard to go for 5-to-1, right? It's hard to know the stocks that are going to make 50 cents and you're only risking 10 cents. But somewhere in the 3 to 2 to 4 area, it's not too hard, right? Like you've seen this pattern before. You're saying, okay, it has the potential of making, let's say, 30 cents. If it doesn't work, I'm only going to risk 10 cents. You only have to be right 30-40% of the time, and you're still going to be green. Like if you do the math on 10 trades. So understanding your risk to reward is extremely important, in my opinion.
I agree.
Now, I like to show this, right? This is where most traders lose right here at the top. You know, the euphoria of seeing this spike, you know, they jump in and they're like, oh, it's going to keep going. It's going to keep going. GameStop is, you know, this is the next, this is like, this is it. This is where the majority of people lose money. I always say, like in day trading, if you see a spike, you're too late. You know, like you can see a spike. Like let's say you see this spike, but then you see this pattern, right? It kind of made like a little bull flag. So something familiar formed here, right? It spiked, then it kind of formed a bull flag. You may want to enter here, which is the break of the previous high candle, and your exit would be here. So here, at least there's a little bit of a plan. But you know, 2% of successful traders, early swing traders, find the stock here. It's hard to find stocks like this early. And then 15% of breakout traders may get out here. But the novice traders, 70% of them lose money here. This is where the majority of people lose money. They see this top and they try to make money. Then you got the shorters here that some of them, you know, make money. And then you got a small amount of dip buyers that are able to identify these big dips and get in here and then catch the reversal. So where do you place yourself? You know, hopefully the majority of people place themselves here. They jump in this high here. You know, you obviously want to get out here and break out. If you're, I'm not a big shorter, so I'm not here, but I like to either be a breakout here or like a dip buyer here. Early swing trader, it's really hard to do that. I mean, I've done that a few times where I'll buy the rumor, sell the news. I did a video on BLRX where I read everything about that stock. They had some peer reviews, and I knew that they were going to get FDA approval for their drug just based off of like some of the blind studies that they did in the past. So I bought it early, and then once the news came out that they got FDA approval, it went up like 80%. So you know, but those are very few, and it's hard to like identify those. What kind of trader do you find yourself, Penny Slayer?
So yeah, I'm usually the early swing trade because I use confirmation, right? And so whenever I see that little bit of volume and then it reaches new highs, I'm like, okay, this is surpassing. It's got a lot of volume, and then I let it build support. Even in this chart, you can see right after that circle on the 2%, the dip right after that spike is actually building support on its old resistance. And so this is a beautiful chart, right? I mean, this is exactly what I look for to staircase step up into a much bigger and larger position.
Yeah, absolutely. And if you're swing trading, if you can use some fundamental analysis in your favor too, I mean, that's even gonna make it stronger. I think what was your the guy's name that does the class for you?
Oh, Caviar.
Caviar. Yeah, he was
Yeah,
talking
my
about
guy.
he was talking about oh wait, we got a question here. Where is it possible to get alerts from? So what platform do you? I use TradeView. On TradeView, you can just right click, and I'll pull up the chart real quick. You can just kind of like right click on TradeView, and there'll be like a setting where it says add alert, and you can do it that way. I'll pull up the chart after these slides to show you.
Hey, Juan,
Oh,
I really think you should, that scans, SCANZ, is that what it is?
yeah. Mhm.
Yeah, that's a big one to look into, guys. I mean, listen, sometimes it takes just a little bit of investment for you to get everything that you need in this smart stock market to be successful, right? I mean, the investment in the mind can be monetized forever. And so if you get that piece of information, if you can harness like news catalyst, it's going to change the way you trade forever.
Absolutely. So, key point: understand your emotions, know your weakness. Trading is highly influenced by emotions, so control yours. Or sometimes, use it to your advantage, right? Like if you see like a stock that's like on fire and it's just like it goes from $3 to $100, kind of like a DWAC. Sometimes there's going to be sympathy plays, right? So look for sympathy plays, maybe, and try to trade those. Like there'll be a lot of a flock of people that they're upset they missed the spike on DWAC, so they find the next thing that's related in its sector or whatever. You may find another one that has like a big move. A mistrade will never lose you money. However, a bad chase of a play statistically usually ends up in a loss. So if you don't trade, if you sit out because you don't feel comfortable, it didn't meet all your criteria, then you don't lose money, right? It's when you jump in, and if you jump in a bad trade that is not in your favor, then you have a higher probability of losing money.
But what I also want to add to this, sometimes you've got to trust yourself, right? If
Yeah,
if you've gone through this plethora of learning how to trade and learning how to get into a position, and then you stutter step, that can also be detrimental too. So sometimes it's really good for you to trust yourself and trust in what you've learned. And
heck
then
yeah.
sometimes if what you've learned just isn't correct, it gives you the opportunity to go back and perfect it. And I think that that's really what you're looking for as a trader.
All right. So look at like Tesla here. Somebody asked me, they bought some puts or whatever, and they asked me about Tesla. So I built out some. If you look at here, like it bounced off of this area, adding an alert. So I right click here, you add alert, and then you just set the price. If you want to do it by value, you set the price where you want the alert. Then it'll tell you how you want to notify. If you want to pop up, I gotta or you wanted to send you an email, you could put the alert name here and then the message here. This is Tesla, let's say crossing, whatever, and you just create, and that's it. It's that easy to create an alert. So, like, I'm looking at Tesla, for example, it's holding this trend, and then it just broke the trend. I made this a few days ago, but look at this. It looks kind of bearish now, right? Because it broke this uptrend, and then look where it couldn't pass right here this day.
Yep, rejection.
Rejection of the previous trend. So you look at this and you're like, okay, maybe this is kind of like a bearish signal, and then look, it went here from 121 all the way to 997. That's a big opportunity to make money on this. If you looked at this stock and you're like, you see it break the trend, you see here support didn't hold, there's potential to make money. Then it spikes back up, but it's not able to break this. This is further confirmation that, hey, you know what, I should buy a put or whatever. But yeah, you could have built an alert just by right clicking, add alert, and then setting the price where you want the alert from.
Yep.
So look, and then look at here the next day. It's not able to break this area. So to me, this stock, right, still Tesla, it's still bearish right now. Look at all this buying volume, yet it wasn't able to break out the previous support, and the previous support is becoming resistance.
Hmm.
So this is like further confirmation for the bears that maybe they got into a position. They're probably still going to be holding, but Tesla, it's its own beast. I mean, Tesla does whatever it wants.
I mean, all Elon Musk has to do is come on Twitter and say something
Yeah,
crazy, right?
yeah.
We found the cure to water. I'm
Uh,
like, what? What do you mean cure to water? What does that even mean?
that's it. So, do you have anything else to add, Mr. Penny Slayer?
No, man, this is great, man. I love this. I think one of the things that a day trader has to do whenever they're thinking about psychology of stocks is let go of the outcome, right? And then embrace the process. Embrace the process of learning how to perfect the way you trade and not the way someone else trades. So if you are in some type of community where you're getting alerts or whatever, if you're following somebody and they're saying, hey, go buy this, make sure that that trade makes sense to you as a trader and not just because you're blindly following someone else and leading you to success, right? Because you are only going to have fear in that trade because you don't know what's going on. You don't know why they're getting into it. You don't know why they're trading it. You should only be using people's, uh, you know, I guess, alerts to get you into a trade or to get you into a stock after knowing exactly why they're getting into it. And it shouldn't have anything to do with like catalyst. I mean, it can come, but there can be a buy the hype, sell the news situation. So you may not get what you want out of the trade. It may already be priced in. And so that gives you the ability to go back to your technical analysis and say, okay, this is where I made my mistake. And so just understand that you really want to be out there learning these technical analysis and learning your moving averages and learning your Bollinger Bands and learning every other way to possibly trade and really digging down deep. Because if it's something that you really want to do, if it's something that you want to be successful at, you can do it. It's
Yeah.
possible. People make money in the stock market and replace their yearly income from trading the stock market, and it happens. It happens on a daily basis. The problem is you have to invest in the knowledge for it. You have to go out there. You have to go get it.
Absolutely. So this was another trade I recorded too, and I just want to show, like, people think like you have to find those stocks that like that DWE, DWAC, those game stocks to be profitable, right? It has to run up thousands of dollars. To me, sometimes, like a perfect trade is like, okay, I know I have the potential of making, 30 cents and I'm only risking 10 cents. It's a small trade, but those small trades build up. So like on this trade here at 702 and 703, all within a minute, I bought 300 shares at 996, 300 shares at 988, and 300 shares at 941. And then I sold them at 10, 1021, 991, all higher than when I entered them. And then an hour later, you know what? I saw that trade. It fell again, and it had the potential to make profit. So I saw it. I got in at 837. So that I bought 500 shares at 837. So 250 at 862, 50 at 875, 100 at 865, and 64. This builds. I don't know how much I made this day, but this is. I started at 7 and finished at 8:05. This is 1 hour. And let me see if I show what I made. I'm not sure. So I'm kind of explaining why I jumped in the stock here. Look, I jumped in. Let's see. This is, this one? You know what this is, right?
Is this trade ideas?
Yeah, that's trade ideas. I used to
My
use
man.
trade ideas.
Yeah, listen, I love all the tools that you use, man. I mean, listen, I'm a big believer in tools, man. Go get it. Do you still use trade ideas?
No, not anymore. No, not as much. Oh, okay,
Yeah.
here. I made $400, 398.
Yep.
Yeah, this is real. Like if someone shows you this, like this is not on an Excel sheet. You know what I mean? Like some people fake. This is real. Like if you have you ever used Lightspeed?
No, I haven't.
Okay. So if you use Lightspeed, you know that this is their real level 2. That was their real box that they show their profit. You can't fake this stuff. Like this right here, this is their orders.
Right.
You can't fake this, if you see like a copy like on an Excel sheet, more than likely somebody faked it. But
Ah,
straight from the broker, right? Like it tells you the price, the limit, all this stuff is, you can't fake this like right
yeah.
away. So, and it's not like, I mean, okay, it's not like I have like $100,000 profit anyway. It's like $400, man. But
Yeah,
it's
right.
within an hour, and you just kind of like, you do this a few times a week. At the end of the year, you're building money. I mean, you
Yeah,
want to be
think about how
profitable.
much you make in a day, right? I mean, just think about how much you make in a day. Can you double it in the market? I mean, that's what I kind of try to do. Like, I don't really set prices like that, but I go, okay, listen, if I double what I make in a day in the stock market, I'm gonna take my break. You know what I mean?
Yeah.
I'm like, all right, I'm done. It's like this is it. This is where I draw the line. I don't force any more trades. because then at that point I get more risky. I'm like, all right, well, what's DWAC doing right now?
Yeah.
I just need to step away, man. I just need to get out of there and go spend some time with my family, man, and say, hey,
That
listen, let's go have a steak dinner tonight. I can afford it.
yeah, that's what it's about.
you know?
So yeah, absolutely, man. So this right here, this is maybe your style and maybe Malik's. I know you guys are breakout traders.
Yep.
But this is like a potential breakout to me. Like this is how I would play a breakout. Like if you missed a spike, you see here that it's still like you see the spike, it's still like on an uptrend, and this was previous resistance. So you may want to jump in. You kind of see like this bullish signal here, and you see it breaks out at that point, and there's potential for profit here. Let's see. You see the spike.
Yeah, man.
This is what breakout
That's
trader
my
wants to
baby
see.
right there. That's how I trade. I'm trading on that green candle. That's me.
Yeah,
I'm in it.
you're in here because look, it's above these moving averages. It broke out here above the VWAP. This blue line is previous resistance. This yellow line shows you that it's on an uptrend. You got this spike of volume. Look at this spike of volume. This is a perfect breakout trade right here. And this is on the 5-minute. Look at the 1 minute here. It's building, building, building. So there's going to be another group of traders that probably come. They're waiting for like a bull flag. They're waiting for a pullback. They missed this spike. And let me see if it does a bull flag. I don't remember. Oh yeah. Okay. So let's see. Starting to pull back. Yeah. See, look at that.
Yep,
Perfect.
bull flag right there.
Yeah.
Yep.
Yeah. I haven't watched these videos. I'm watching these live, so I haven't seen this in a long time, but let me go back to it. So
right there.
Let's go back. Yeah. So check this out. So right here, you're going to have two types of traders. The novice trader is going to see all these 4 green candles, and this is the 1 minute chart. So each of these candles represent 1 minute, and they're going to say, you know what? I want to jump in. I think it's going to continue going, right? There's no strategy, right? This is where the new person, they see this and they don't have enough patience. They're like, oh, it's going to keep going. So they jump in. Let's say you jump in 5,000 shares at $2.16, right? Then they're up, so it went up 3 cents. Let's, if you have like, let's say 10,000 shares and it goes up 3 cents, you're up $300 or whatever. So you're like euphoric right now. You're like, okay, it's good. I'm still green. You got in, you're up 2 cents, you're down 2 cents. They're getting nervous right now though, because it's not continuing to move. Now they feel good. They're up 3 cents, down 3 cents. This is what the new traders feel. I'm telling you, because I've been there.
I know it, man.
Now they're down. Now they're down 10 cents. So they're down $1,000. They're like, oh my God, I'm down. Okay,
I've been on live calls with traders like this, man, and I'm going, guys, you shouldn't be here. You shouldn't be in this right now.
So this bull flag that pulls is because they get scared and they sell everything. Right here, that trader that I was talking about, he's 100% out right now because he was down 20 cents. Yep. So if you're down 20 cents, if let's say you only have a $5,000 account and you buy like 1,000 shares, you're down, $200, which is when you only have a few thousand, that's a lot, right? So he's out of this position. He lost. But the experienced trader said, I missed this. I'm going to wait for a pattern that I'm familiar with. And if it doesn't pull back and it doesn't form a bull flag or anything, then I'm just not going to jump in it. But the experienced trader now, like I was telling you, I'm like, look, I'm waiting for a bull flag. And I even pointed at it. I think like, so I'm looking, I'm building this as support. Let's see what it does. So right now, the experienced trader is getting ready to jump in this stock. They're like, okay, you know what? I want to see a bull flag, right? This is the experienced trader. The novice trader already lost their money.
I'm also looking for the 50-50 rule too, right? I mean, sometimes on these pullbacks, if they just dip 50% of its past spike, or even if it's building support on old resistance, it's a green sign for me, man. I love that.
Yeah. Yeah. So like I see these wicks tap this area here twice. I'm going to build this as support. I'm going to say, you know what? I'm going to hold right here. This 192 is holding. This moving average is holding. And I may say, this is my stop loss. Now I want to see a candle that's larger than the previous candle for my entry.
Watching that candle wick on the bottom build too, right?
Yeah, absolutely.
That wick gets longer and longer.
You see this wick here, the wick right here jumped on the moving average. It's testing it again, the moving average. So I'm still watching, haven't gotten in. I would want to get in when the next candle is a positive candle and it's larger than the previous candle. It's higher. and there's some volume, but it's holding. Look at this moving average holding strongly. So this is like when the experienced trader is looking at this and they're like, okay, this is doing exactly what I wanted to do, and waiting. Like I said, the rookie, now I see this, it breaks the previous candle. I may jump in now because the stop loss is right here, very small stop loss. And I'm going to take some profit if it breaks this, and I want to see this area now become support for me to hold on to the rest.
Always take just a little bit of profit off that top, and then
now look at this.
Love that.
So it broke this area. I took some profit here. Now I'm more confident while I hold this. Yep. And as long as this holds as support, I can keep holding.
Man, I love that trade.
There you go. Great trade. Look at that. And look at how high it went.
And it staircases up.
Yep.
Love it, man. That's good
so
stuff.
Really, like it seems like we recorded this, and it seems like on you're saying, okay, you're a Monday night quarterback. Well, no, I was like recording this live, and I was commenting, and I was actually doing the trade while I was commenting. It's hard to do, like, I mean, but it's easy also. I mean, it's like there's so much emotions here in the beginning. All this, there's a lot of emotions here. You have to kind of like stop, look at it, and say, you know what, let me wait for a pattern. If the pattern doesn't form, then you don't take the trade. And you don't lose.
Sometimes, Juan, in these early morning trades like this, you can get into a halt up pretty quick.
Yes, yeah. I think I have a halt trade here where I break out or halt.
Do you have any rules about trading with halts? Do you have anything that you kind of stick by whenever you're in a halt trade?
Yeah, usually it depends. If it's like the first halt, I kind of sometimes set the limit like a little bit below, or I look for a previous support, because usually, like, sometimes, like, coming out of a halt, it may dip really quickly and then reverse. So it all depends. If it's like the first time, I may jump in if it's just the first halt. Like, if it's the first halt, I may try to jump in small position.
Right.
So this was the 1 minute, but I have here the 1 minute, and I also have the 5 minute. If you're day trading, you're going to want to look at the 1 minute, the 5 minute.
That's it's a really good question too, because essentially what I do as a day trader, right, is I'm definitely looking at the 1 minute because I want to know the intricacies of how the stock is moving. But it's very important for you to know what the stock did in the past, right? And so bringing that minute chart out to the 5 minute or even the 30 minute, right, or to see where it could go for the rest of the day, I think is really important, and as long as you know where your spikes are in the past, you're going to see some resistance levels at those spikes. So you can almost set your profit taking at those old spikes, and so it's really important to read the stock market like a book, and you have to go back a few chapters in order to see where your profit taking should be. And it's super important.
Yeah, absolutely. So this one here, I don't remember what I was looking at. So let me see. So I set this area here of resistance. I think I wanted to jump in if it broke this, and this was going to be my entry. So like, it was kind of like with the pre-market high, and it was resistance here. So I think I say, okay, if it breaks 489 on a bullish candle, if there's some volume, if it becomes support, all those things would want me to enter the trade. So it's testing that 489 again. You see here, it's testing the 489. It's testing that 489, 488 area. Okay, it breaks it. And look, 509. Now maybe 518, I may take some profit here, and I'm talking about it. I'm saying I'm gonna take some profit here at 518 partial, because that was the pre-market high. So I want to take some partial profit at 518, and then see if it becomes support. So what I'm looking for as it break these important points, which is the pre-market high, I'm looking for it to break it, and then just like here, like that it previously broke, now it became support. So now look, it's starting to break. I took some profit. Now I'm saying if I put the volume, I'm talking, I'm going to keep holding if 518 now becomes support. So look, 525, 521. So look, it's breaking 515, and that area now is support. Look at this, it's support. Now I have another point of resistance, 532. It broke that. So now I want to see 532. If I want to keep holding on, and Yeah, at this point, I'm holding on to a small portion. I'm not holding on to 100%. There's no way. I mean, that's I'm not that perfect like that. I mean, like, there's no way I would hold on that much. I'm taking small profits of areas where I think it's going to reverse. And then if it doesn't reverse, I'm still holding on a little bit longer. So now I have 530. And look at the plan, though. Look, 532 is holding. Now I have my next point. Look, I'm thinking ahead. Now I'm saying, okay, if 532 becomes support, I'm thinking 587 is going to be the next area that it has to test. So look at this.
And why do you think that? Why do you think 587 is the next one to test? How did you get to that point?
I probably went on the daily chart and went further back.
Bingo.
Yeah.
Bingo.
Yeah, I went further back. I don't think I showed it here, but I'm almost positive that's what I did.
Bingo.
Yeah. So look. Oh wait, I went too fast here. So look at this perfect test of 587. It went there. It tested it perfectly. You see how history repeats itself. Look at this, perfectly tested it. Oh, I kind of skipped. So 587, it broke it, and it went as high as 614, and then it just came back down. But this is a perfect trade. I mean, this is like you jump in. I jumped in the trade. You managed it perfectly because of previous areas, and then it just it was great potential to profit.
Scalping on the way up. That's the way you trade, man. I love this one. This is how you do it, man. I mean, this is how most traders are trading the stock market, right? I mean, this is how it's done. I love this, man. This is good stuff.
And look at the stock. I mean, I didn't at this point. I was all out, but I just kept watching it. But it just kept going. But now I'm saying, like, look at this uptrend perfectly. It's holding. I built this arrow to show that it's holding an uptrend. And I don't remember how high this stock went, but look at this. Look at that. It was a beautiful, beautiful trade. I mean, I was all out at this point. I didn't get this high like this. There's no way.
That's the goal, though, Juan. I mean, it's not about selling at the top, right? It's not about missed profits. It's about having profits in general. You know what I mean? Like, if you get away from trying to sell and get these home run plays and build on multiple wins in a row, that's the key. That's the game.
Yeah, absolutely. And I think when I was talking, like, I have the volume off here, but I think when I was talking, I was saying that even though I didn't get this all the way at the top, one thing is this is not the norm. This is not what happens the majority of the time. And you have to be in trades and get in and get out with what happens the majority of the time, right? The way I played it the first time, where I say, okay, this is previous resistance because it was the pre-market high. I'm going to take some profit there and then see if that holds a support. That's perfect until I was 100% out. How it kept going all the way from 4 something all the way to 780 or whatever, that's not the norm. I mean, most stocks aren't going to do that, but you do find them occasionally. You just want to pick the stocks. You want to pick the patterns and the areas that happen the majority of the time. Let's see here.
Good stuff, Juan.
Yeah, let me get one more here. Okay, this one too. I remember this. This was another ABCD. So this was, I saw this. I missed this spike here. I missed it. I didn't catch it. There was some sort of catalyst, I think. Here's scans. So I saw something on the scans, and I missed the spike. I'm looking for an entry. If you see here, I don't have an entry yet. So this is actually a recording where I haven't even entered yet, and I'm trying to decide. I see that it spiked up. I think I'm showing you here what the catalyst is, if I remember. Let me see. So yeah, I'm trying to find the stock and trying to show what the catalyst was when I recorded this. Okay, let's. Yeah, I couldn't find it, so I typed in this. I'm gonna type in probably FRSX. I mistyped it. So yeah, you can kind of like just type it in and it'll tell you what the news was. You can go here. So let's see. Oh, here's the news catalyst. So Rail Vision enters electricity powered light rail vehicle, multi-billion-dollar market with order from. So this is what I saw. I was like, okay, look at this. Look at this news. Multi-billion-dollar market order, right? I was like, I knew I was getting into this stock. I haven't even opened up a position yet, but you see how I'm pointing the arrow at that multi-million-dollar? Like, I'm commenting and I'm saying, look at this catalyst. There's going to be volume that comes in. So let me fast forward. Okay, here we go. So now I'm very interested in this stock. I missed this spike. This spike was because of that multi-billion-dollar contract. So I'm trying to decide where I'm going to enter. You see here, I formed this. This was the low. I want to see it. I want to see it form a lower high, right? So I jump in. How many shares did I buy? 4,000 shares. Oh, I already had sold. I guess I did this trade early. So I bought in at 190 and then I sold all these positions. Let me see. And then I was saying it's looking like it's forming an ABCD pattern. So I'm probably going to make the letters now. Let me just. Yeah. Yeah. So this was an ABCD call. So with this, you want to see it break this and you want to see this area become support. I started looking at other stocks here, I guess. I don't know. Oh, this is like a gap to fill play. Let's see if I go back to the other stock. Okay, I went back to the regular stock. So this is like I was trading and stuff is popping up. I was looking at SAG. I was looking at other stocks and just kind of like briefly talking about them, I guess. I don't know why I was looking at SAG. I'm not sure. Okay, look at this. See? A, B, C. This is breaking this area is going to be the D. It's the high of this. So you can see like this is real time. Like I'm commenting. I'm saying this was the low. Then it formed a lower high. So this will probably be a good entry. Pull back here. Look at the volume increasing. Now it's testing this area here. This is where you would take some profit, partial profit, and then you would hold it if this area becomes support. So here again, it's testing it. Look how it's testing it perfectly right at that area that we marked 30 minutes before we actually got there. And look, it's not able to break it yet. Volume decreased a little bit. And then finally it broke it. See here, I wrote, that's supposed to be a D. But
looks like a circle.
I know. I know. I think I was trying to like just write real quick and just show comment on it.
ABCO.
So look at this. Now I want this area. It became on this wick here. It became support. And we want to see if it holds.
Yeah, I think it's important for people to see this because, you know, everybody sees that first volume spike and they go, oh, well, I missed it, you know, but that's just not true, man. It's just, you just have to be patient. Patient.
Look at this. Yeah, for sure. Look at the opportunity.
Yep.
I mean, from $2 to $2.70, you missed a spike. Okay. Then you saw this, made a lower high, jump in, you know where your stop loss is, and you have the potential of making that type of profit. I'm not sure how much I made on this trade though. I don't know if I show my thing.
It's good stuff, Juan. It's free education right here, guys. This is free. This is what's amazing to me, Juan, is this is the stuff that people pay thousands of dollars for.
Absolutely. I know.
Right here on Juan's channel.
I've seen.
Speaking of, you guys should hit that like and subscribe button. You see, look, I got that from
here we go,
man.
Here we go. Look, now I found it. I found that on the video. This is how much I made: $1,148.
Yep, that's awesome.
And how? Let me see. Let me go back to see how long this trade. Okay, here we go. Hold. Let me pause this. Okay, so look, I jumped in this trade at 8:31 in the morning. This was this was a pre-market trade. Okay, this was a pre-market trade. Yeah, like look at the shade. So 8:31 in the morning, I jumped in $1.90. And I sold 2 minutes later. I was totally out of my position 11 minutes later. You see here, 8:31, I sold 2,000 shares. So I sold half my position at 216. Then I sold 500 at 240. And then I sold some at 224, 219, 213, and 206. I was totally out of my position. So you see here, 8:31, right? And 11 minutes later, I was totally out of my trade. And that was $1,100. So 831. Let me see where. See here, $1,148.
Man, you know, pretty soon, you know, these TikTok guys are gonna watch you driving in your Lamborghini somewhere, and they're gonna go, "Hey, man, what do you do for a living?"
No, no, man. So 831. So yeah, I jumped in around here, and 11 minutes later sold all my position.
It's
But
good
that's it.
stuff,
That
man.
yeah, that was an ABCD pattern.
Bingo.
Look at this.
I love that,
It's
man.
yeah. I mean, to be able to identify this early and jump in, you know where your risk, because you jump in here, you know where your risk is. It's right here, the low of the B. I knew if it would have dropped and not worked out my way, I'm jumping out no more than this. If this breaks 195, it breaks this B area, I'm out. So I know my risk. It's about 10, 20 cents. But the profit potential was the high of this, 247. So it's 30 cents.
It's great stuff.
Yeah, absolutely. So this is why it's important to like review your trades and kind of like here we go. Got a question. What are the reasons for the first pullback despite the bullish news? Oh, that's a great question. So let me show you something here.
Yeah, show the past right before that spike, right?
Yeah. So we'll pick I don't know, mRNA. Let's see. We'll go 5-minute chart. Okay, I don't have a great example right now. Let me see here. But for me, when I'm looking at something pre-market, right? So you're asking what are the reasons for the first pullback? Usually people taking profits. I mean, that's the main reason. People are taking their profits on the first pullback. So for me, what I do when I'm like trying to figure out like the stocks that I showed, I usually do something like I'll do the Fibonacci retracement, right? And I'll look at where the high was, right? So this is just showing you what I would do. I mean, this stock here is not a great example, but I'm just showing you. So let's say pre-market, right? It spikes up, right? And then it pulls back. So it's pulling back because people are taking profit, right? Even though, like you said, it's bullish on the news, it's all that. People still want to take their profit, right? So let me go back to that other
I got
video.
one for you. Well, kind of. I'm trying to. Yeah, here we go. I got one for you. Go to LLL. This is that trade that I took. That was an anomaly. But if you go back to what day is this? Go back to the 22nd, March 22nd. Boom. All right. So do you see this big spike on the March 22nd, right? That big, huge green line on that daily. So usually the reason why you will see so much pullback is because of everything before that spike. These are people that have been bag holding this stock for days, months, even potentially years. So you are definitely going to see some people that are going to go, well, that's enough for me. I've been holding this for way too long. Let me go ahead and exit. But as us, as a momentum traders, right, we go, well, there's more meat on the bone here. Let's go get it, you know? And so you just got to be cognizant that these people have been holding this for so long. And then the news finally came, whatever catalyst they were waiting for. And then they're just taking profits. And so you'll see the stock kind of head down. They've said, I've had enough, you know? But for
Yeah.
us as momentum traders, we're looking for chart patterns and momentum into the stock to make more money from it.
Yeah. Yeah. So, I mean, just identifying when it's pulling back, if it's pulling back to an area of support, and if it's going to break out an area of resistance, that's where you want to jump in. But yeah, I mean, these stocks, they're not going to move up forever. People are going to take profits. So that's why you see a lot of these pullbacks. It's being able to identify a good pullback, being able to identify a pattern like a bull flag, and jumping in at the right time, right?
What
Like
goes
so,
up must come down.
yeah. So this here, like some people probably jumped in here because it broke out this previous pre-market high. So, right. So people are watching this. It broke out this area and then it just continued. And you see, it had a big green
So
day
Juan,
here.
this was the stock that I misread the news on. That I thought that it was
Oh,
a $60 billion contract, but
yeah,
it
yeah.
was 60 million. I don't know. Can you read news? Is there news on here that you can read or no?
Right here.
So it doesn't say it here, but the way that it read is it didn't say 60 MIL. It said like 6000000, and all I saw were a bunch of zeros, and I go, "This is $60 billion. I gotta get in."
Yeah, yeah.
I just gotta take my time, right? It's all about reducing that happy risk there. But yeah, this was a good one. Yeah, I made some money on that day.
Heck yeah. Yeah. You traded it on this spike here?
Yeah, so I traded at the confirmation down there at the bottom, and then I wrote it up to profit. So I think the average there was like 2 and change.
So you jumped in like where, around here?
Yep.
Yeah, look at that.
Yep.
All green candles.
And then it just staircased all the way up.
Yeah, there's big potential for day trading here. So I think that's it. Anybody has any last questions? This was our kind of like last topic, trading psychology. I wanted to save it for last. It's been fun. I mean, all these recordings are still going to be up on my channel for free. Like I said, we're not selling any courses or anything. I do want to start maybe like in a few weeks in memory of what's that guy from Singapore? What's his name again?
Chicken Genius.
Chicken Genius. I'm a big fan of Chicken Genius. I've seen a lot of his videos, and he retired from YouTube. I know he did a challenge. I think it was like last year or a few years ago, where he started off with 10,000, and he kind of like grew it. I know he grew it like really high in a couple of years. So I want to do like one. What's next is live day trading for me. Like I want to do like my thumbnail, for example. Like you know, maybe once or twice a week, like narrow down to maybe 2 times a week. I'm going to day trade live. And like my thumbnail, for example, I'll say 10,000, right? And, you know, it's going to be the intro to day trading. And like my second video would be a recap. I'm going to do live trades, and then I'm going to edit those live trades just to extract the lesson. So like, let's say video 1 is just an introduction of what I'm going to be doing. Video 2 will be like, okay, I traded on Monday, and I will trade live. So if you follow me and you get a notification, you can actually trade with me on Monday and Thursday. But video 2 will be recap of Monday and Thursday. So like, I'll say like, look, I traded on Monday. I made $400. The thumbnail will say now 10,400, right? You'll follow like my journey. Like it'll be clear, transparent. And I'll show like my broker, and I'll show everything. So it's going to be 100% clear. It's not going to be no manipulation. It's not going to be a paper account either. It's not a paper account. It's not a fake account. You'll see like my live state, live everything. And I'm doing that in memory of my man from Singapore, Chicken Genius. Chicken Genius. I don't know why I keep forgetting his name, man.
Chicken Little.
Chicken Genius. Yeah. Because he's a real one, man. He's like, he showed everything live. So I want to do something similar like him.
Man. Good solid guy.
Yeah. So let's say I lost $1,000, right? You'll see on the next thumbnail, it won't say 10,000. It'll say 9,000. Like it'll show like actually like where my numbers are. And then like, if you watch the video, you'll be able to kind of like affirm like, oh yeah, look at his broker statement. Look at his thing, everything. Like everything's going to be transparent, and it's not going to be, there's no charge or anything. You just like, if I'm live trading on Monday and Thursday, like anybody can just watch the same way you're watching right now. Let's go live. You'll be able to see that on Mondays and Thursdays when I start. So hopefully, you know, like those thumbnails, like if you know, the numbers are going to be higher and higher. That's what you know, the goal is. Obviously, maybe next year you'll see like super high or whatever. But
love that one.
That's kind of what I want to do next.
Good luck, man. Good luck. We'll definitely be tuning in. That's for sure.
That's it. All right, guys. So this was the last one. I hope everybody enjoyed it. The recordings are up there. Thank you, Penny Slayer, for being such a great co-host. Absolutely, and we'll see you guys around. Appreciate it.
See you guys. Y'all have a good one.